It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Tuesday evening, March the 22nd, 2016. We have another exciting newsletter in store for you guys and gals tonight. We got crude oil, S&P, gold, and of course the euro. But before we begin, I'd like to take a moment to recognize the horrible tragedy that occurred today in Brussels and send my support to anyone and everyone who has been affected by this act of terrorism today. As someone who has family in that area of the world, my heart goes out to you today, and I hope that you'll find peace this evening as the sun goes down, that you may find the strength to keep pushing through this, showing the people who did this that the freedoms they are trying to prevent will not be discouraged through these unnecessary acts of violence. Also, with that said, I also need to make you aware this will be my final newsletter for the week. I'll be traveling for the Easter weekend to celebrate some very important people in my life later this week. So my next newsletter will be next Monday evening. And of course, our live trade room will be open like clockwork for the rest of the week, like it always is. I appreciate all of you joining me this evening during this time of tragedy and loss. And I look forward to another productive video this evening. As a professional, I'm going to push through this video, push through this newsletter, and I hope that you'll join with me. Starting back up again. Crude oil is range bound this evening. It tells us to use range rotation and failures for the most reliable trades tomorrow. The E-mini S&P is bullish, but a recent overshoot tells us the best opportunities will be after a correction back to the channel lows, where we will be looking for a trap low to buy it back up. Very similar as we saw today on the S&P. Gold is bearish, but a completed measured move and rising support tells us the best selling opportunities will come after a bullish correction back to resistance levels overhead. And of course, the euro is bullish with a short-term range this evening, but the long-term bearish trend will likely cause some confusion tomorrow. So our plan is to look for failures at the extremes for the best trading opportunities back up to resistance levels overhead. We get some great charts to look at tonight, and I want to remind you, before we jump into our charts, the only place to find the full-length version of this newsletter is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link right in the description of the YouTube video. Follow that link and come join me on our trading blog at Sideways Markets to watch the full-length version of this video. While you're here, don't forget to grab a free pass to come out and join me in the trade room as a guest. Lower left-hand corner, you can join our nightly newsletter mailing list. That way I'll send you an email every evening. The nightly newsletter is ready to be watched. Promise no spam. Just give me your name and your email address and then check your inbox so you can verify we have the correct email address, and I'll send you an email every evening when the newsletter is ready. Right below the video tonight, you'll see a download link to download all the charts that you see me using in tonight's video. Nice and easy for you guys to have those charts ready for your computer tomorrow. And then over on the right-hand side, you'll see a spot to register as a trial member. Not to be confused with the free pass. The trial membership will teach you all about the different strategies we use and give you more information on what it feels like to be a member. Now, as of right now, our office apparently needs to reset its live chat server. So we'll get that live chat server restarted. But typically, you can find that live support button active, right, and contact us 24/7, 365 if you have any questions. We'll make sure to restart that here once we're finished up with this video. So guys and gals, another exciting newsletter in store for you guys this evening. Again, I appreciate you sticking with me here tonight, even though I'm sure a lot of us are being distracted by the recent headlines, right, in the acts of terrorism that occurred today in Europe. Let's take a look at tomorrow's schedule, starting out with the economic news schedule for tomorrow. We have Wednesday, March the 23rd. We have 10 a.m. news and 10:30 a.m. news. Looking at the first one, we have the 10 a.m. new home sales. That is a Red Star news report. That will get us going tomorrow morning. And then we have, for all you inventory or for all you crude oil traders tomorrow, we have the inventory report at 10:30 a.m. Now, we like to sit on hands 5 minutes before the news, and we usually give it 2 or 3 minutes after the news comes out. Keep in mind, though, tomorrow's inventory report will have us trading crude oil until 10:15 a.m. Then we're going to take a timeout, wait for that 10:30 news to come out, and we'll get back to looking for opportunities after 10:40 a.m. One thing we have to be aware of, inventory days for crude traders are a very different animal. They're often range bound. They're often a little bit lower volume. The most important thing is you're going to see volume really start to slow down after 10:15 tomorrow morning. Be very careful after that news comes out. I say 10:40, but oftentimes, right, it goes all the way into 11 o'clock. It's always really important that you understand that after 10:15 on a Wednesday, it is gambling if you're day trading crude oil, right? So be very, very careful tomorrow morning. If you're planning on trading crude with us tomorrow, just be careful after 10:15. I always remind everybody the night before, after 10:15 tomorrow, you are gambling. After 10:40, that's when price action will typically start to find a new direction. But there's a lot of gamblers, there's a lot of speculation, there's a lot of traders that do things they would never normally do. Buying high, selling low, right? Just, it's very easy to make all the right decisions tomorrow and then get caught up in the emotional, psychological reaction to that news that comes out. I always tell my new traders out there to skip it. We have so much opportunity we get every week. We like to sit on hands, though, around that 10:15 to 10:45. So be careful tomorrow around the inventory report. So two major news tomorrow, right? New home sales, and we got the inventory report tomorrow. And again, you've already heard my disclaimer, right? My warning after 10:15 tomorrow morning if you're trading oil. I would also imagine tomorrow we may continue to hear a little bit more about the developments of what happened today in Brussels. So that will be something we'll be listening in live in real time tomorrow morning. We have a live news data feed. We'll definitely be paying attention to that. I don't expect to see much more tomorrow that would be, kind of earth or market moving tomorrow coming out of Europe. But we will have our eyes and ears open for that tomorrow, as we always do, right? For any unexpected news, like for what we saw this morning. Jump into charts here tonight. Looking at crude, we'll go crude, S&P. We'll go some gold, and we'll wrap up with the euro. Now, crude oil is being really, really easy for us tonight. This is the same range that we had last night, right? Made my job very easy. And with a range-bound market, the range always takes precedence. Okay, you're going to get out there in these crazy markets in the future, and you're going to see times where there's ranges and there's channels. Just remember this: once a range, always a range. Use the range levels. The range levels are always going to be the most important factors on a chart when there's an obvious range like this. So crude oil is range bound this evening, which tells us to use range rotation and failures for the most reliable trades tomorrow. The range makes it quite simple for us this evening. The range tells us to focus on buying the lows and selling the highs using failures, and to give the buyers and sellers 2 attempts to rotate back and forth inside the range. We have an inventory news report tomorrow morning at 10:30 a.m., which will likely shake things up. And our trading cutoff, don't forget, is going to be 10:15 tomorrow morning until after 10:40, if anything at all, after that 10:15 report comes out. Now, let's take a moment. We talked about this last night. Let's take a moment to talk about how we use a range. First of all, find the range, and drawing the range correctly is of the most importance, right? In my intermediate course here at School of Trade, we define proper channels, proper ranges, proper wedges and triangles, and how to use all these tools correctly. So when I talk about a range, the first thing you must understand is that you need to know how to draw them correctly. Once you have it defined correctly, we add the range expansion below, we add the symmetrical range expansion above. The initial range is the balance area. 2 tries. Give the buyers 2 tries to rotate to the highs. Give the sellers 2 tries to rotate to the lows. Give the buyers 2 tries to rotate to the highs. If they can't get to the highs, they're going to run towards the range expansion. Same thing will happen to the opposite side. If the sellers try twice to get down to the low and they can't get down to that low, they're going to run up to the range expansion. Obviously, on the way up to the range expansion, the high of the range is the first target. The next target, of course, is the range expansion level. That's what I'm talking about when I say rotation and the 2-try rule. Give them 2 tries to go up, 2 tries to go down, and if they can't get there within 2 tries, it's seen as weakness and the opposite side will attack. Now let's talk about failures. You have to focus on failures when it comes to trading inside of a range. What am I talking about? Well, first of all, at the lows, we're looking for sellers to try to sell. We know where their stops will be, and we're looking to buy the low using a seller failure. Target, of course, is back up at the high. We go back to the high, look for the buyers to try to buy. We know where their stops are, and we know to sell the high using a buyer failure. So rotation, the 2-try rule, and focus on failures. We give the buyers 2 tries to get to the highs. We give the sellers 2 tries to get to the lows. At the lows, we're looking to buy the low using 2 tries and seller failure. At the high, we're looking for the buyers to try to break out of the range, give them 2 tries, and look for buyer failure to sell the high. Don't forget, if we happen to break out of this range, for example, we do successfully break to the upside, we keep a focus on the original balance area, and we continue to look for buyers to try once, buyers to try twice, and selling opportunities back into the original range, right? We keep looking to fade that market back into the range, right? The key is the balance area. Think about the pendulum, right? We talk about the pendulum swing. The balance area is right in the middle, right? If we run to the downside and we fail, what's going to happen? The pendulum will swing all the way back up. But now think, what if we run to the high and we fail? If we run to the high and fail, where will the pendulum swing then? It's going to swing all the way back down. So think of it as a pendulum with a balance area, right? The bigger the breakout, the bigger the failure on the opposite side. Ranges are confusing. They're supposed to be confusing. What creates a range? Lack of trend, right? A balanced market. So remember that. It won't be until we break free of the second range expansion level that we can start to rely on the trend. We're always watching for the failures back to that original balance range. Now, back to the chart. Now that you know the plan, perfect example down here today of how the sellers tried twice and failed. Perfect example here of how the buyers up at the highs tried twice and failed. Very good example of range rotation. Low to the high, down to the low, up to the high, buyers try twice, fail. Sellers try twice, fail. Buyers try twice, fail. Where are we going next? Rotation target back at the low. Now what happens if they can't get there? Once, twice. What happens tomorrow if we see this market bullish? First target back at the range high. Second target will be, obviously we have resistance here with that measured move, but the ultimate objective is 42.60. Okay, what happens if we get down to that range low? Then we try to go higher. 1 try, 2 tries, and for whatever reason we can't get up to the 41.72. Price will attack. 40.84. 39.96 is where they're going to be gunning for. Clearly in this case though, we have a previous low of day, right, and double down support. So targets will be at the range low and of course the next area of support. By understanding where the market's likely to move to when we either get a successful range rotation or an unsuccessful rotation, that will give you the benefit of the doubt. That will give you the edge that you need to find those trades going forward. Where will the most reliable trades come? They'll always come at the highs and the lows. Seller failure at the lows. All right, and if you're a member of mine here at School of Trade, right, we look for that double press. You know what we're talking about, right? We're looking for those sellers to fail to buy it back up. Up at the highs, same thing. Looking for that double press. We're looking for that, right, using the 2-try rule and buyer failure at the high, right, to sell it right back down in. Okay, don't forget the pendulum swing. If this thing cruises lower and then, of course, fails down here, that pendulum swing is going to take it all the way back to the opposite side, right? Taking pit stops, of course, at the opposite side of that range. So keep an eye out for range rotation. Focus on failures. Give them 2 tries to get the job done. After those 2 tries, right, we're going the opposite direction. And remember, the bigger the breakout, the bigger the pendulum swing in the opposite direction. Looking forward to this market tomorrow. The only thing we got to worry about tomorrow is just that darn inventory report. I know, it's every Wednesday. It comes the same time every week. And so we have to trade right around it. It's pretty much the only thing that we don't like about trading crude, right, is that we got to take a break. Why couldn't they make that inventory report like at midnight? Wouldn't that be a lot easier on us? It really would, but then it would be way too easy. Let's keep moving, guys.